Thanks for Mark and for Don helping me out yesterday. I hope you guys had fun and hope you did well. I wasn't watching, so you were on your own. Um, yeah, so hopefully, but I appreciate you guys helping me out here a little bit. And I think everybody else likes you guys, so it's good. I'm good. I'm very good with it. So anybody can counteract Mark's like California accent with the Texas accent. There's a good combination right there. All right. So we drifted down to about 32 and change, came back up here. We're looking at 31. Very tight little range. So, be a little bit careful. Nothing to get too excited about so far. All right. Things kind of a little bit slow. As you can tell, overnight, very quiet trade as the market absorbed the inflation number. Now they're waiting for the PPI number, which is the wholesale inflation number. This yesterday's release of the CPI, consumer, it was the retail PPI number comes out on Tuesday. And so that'll be the next maybe aggressive day that we might be trading. And I think also the FOMC is having their meeting Wednesday. I don't know if it's a 2-day or a 1-day, or you would think that over the summertime it'd be just a 1-day because they all want to go play. But just saying that next week, at least we'll have some sort of volatility, maybe. I don't know. We'll see. But at least there's some things in the horizon that might happen to create some volatility. And give us trade. A higher than expected inflation print in the United States yesterday showed prices soaring by 5% in May compared to a year ago, making it the biggest increase since the Great Recession. While it was somewhat distorted by pandemic, dueling narratives are taking shape to what it will mean for the economy going forward. The consumer price index also showed a gain of 4.2% back in April, calling in question the current fiscal policies and direction of interest rates. The bullish sentiment is that the Fed is sticking to its transitory inflation thesis. Which maintains its supply shock and production bottlenecks have led to recent price pressures. That's what transitory means. Many are also quick to point out that the recent inflation print was once again driven by the jump of cost of used cars and trucks, which accounted for about a third of the CPI's monthly advance. Meanwhile, the Biden administration argues that the rising inflation is not only temporary, but it is also a feature of rebounding economy. A broad vaccine rollout and lower COVID-19 case count has seen Americans return to the old habits of spending months of pent-up savings. Months of pent-up savings. And that's good, I guess, right? Chicago is officially opened up today, which means no restrictions in bars or ball games or get-togethers or having to wear masks. There's we're opened up. It's just opened up. So I guess that's a step forward, at least in Chicago, at least in Illinois, Chicago for sure. In Illinois, as the numbers here are extremely down, as hopefully they should be in most states, cities. I guess this vaccine thing does work. And the bearish outlook for the economy is what many Republicans and many economists acknowledge: the post-pandemic supply problem and surging demand, but also flagged the cost of $1.9 trillion stimulus package President Biden signed in March. They further point out to coming proposals from the White House, like spending $4 trillion in infrastructure, as possible risk that could trigger a full-blown recession. While a large share of May's CPI came from the auto market, prices are jumping for many other categories like furniture and airfare and apparel. All right, well, we are drifting in a little bit of a range here, so nothing much to get too excited about. So CPI, um, many jumps in other categories like furniture, airfare. Well, airfares, they're going to go up. Labor costs, transport, raw materials are also skyrocketing. Will inflation be here for the long haul? This could take months before it clears whether the current upsurge is temporary. As the economy reopens, both sides predict the rising costs will continue until supply chains and consumer demand recalibrate. But the real question is how prices will fare after that against a backdrop of massive fiscal and monetary policy support. Yeah, well, we don't know. We shall see. Something interesting happened in the stock market on Thursday, shortly after the release of the CPI, which showed that sizzling inflation figures. The major averages opened higher, with the S&P even setting a new record at the close. And another surprise, NASDAQ had a better day than the cyclical peers as growth trade outperformed value. Dusting off the old textbooks, rising inflation should weigh on corporate profits, reduce purchasing power, trigger fears of higher interest rates, and that's not being felt this time around. You mean let's throw the old textbooks away? That's what it's telling you. Whatever you learned doesn't mean anything anymore. Some investors may be following the transient camp, especially interest rate watchers that are listening to every word of Jay Powell. There's also a lot of buying power still out there, as many traders are looking to ride the momentum. For others, new dynamics may be playing out in equities as I am talking, because there's not much trade, because we are right here at our pivot. Don't you think I'm watching? I know I'm watching. I'm just kind of reading a lot because there's not much to talk about when the market's not going anywhere. Remember, it's Friday. Summertime. It's going to take a number, usually some bigger number. CPI, the recent, at least there's 2 inflation numbers that come out every month, so that'll keep us busy for a while. Let's see if there's any numbers coming out today. Consumer sentiment coming out here at 9:00, so not really a big one. Maybe it gives us some opportunity. I don't know. But you can tell the volume is very thin in the order book. There's just 100 lots up and down. There's not much interest right now. The only reason that we even have any volume right now at all is because of the rollover. So that's I guess is a good thing as far as volume is concerned, but not much else. So again, welcome to some of the new folks that are here. We are trading mini S&Ps. We gave you our levels this morning, and if you missed them, we're going to show them again in the chat box area if we bring that up. In the chat box area, you'll see the levels that we're going to use as a guide for the day. Gives us a game plan, so to speak, for what we're going to be looking for, at least around an area to trade. Support or resistance, or do nothing. And then we have price action opportunities that occur once the market paints some bars. Price action opportunities occur or should occur if there's some movement in the market. That does help. So we need a little volatility is basically what I'm saying. Where's the VIX at? Anybody can tell me where the VIX is at? Are we in the 16 or did we get to the 15 handle? Oh my goodness, 1535. We have continued to slowly dip down and continue to go nowhere fast. That's what happens. That's what happens when the VIX is down at 15. Are you talking about the VIX there, Robert? That's where we're going? Hmm. Well, yeah, maybe. That would be correct there, Don. Uh, okay, well, anyway, the trick to this market, if there is a trick, because I really don't know all the tricks, but if there is a trick, is to just be patient and wait for the market to give us an opportunity to trade, right? You know, you want to trade every day. We get in here and we are all ready to go, but we need some volatility and movement. Does help. So until then, we have to listen to me talk or be patient and not do anything. But that's how you make money at the end of the day, because you have to express and show some patience in the market when it's not doing anything. All right. So they're listening to Jay Powell talk. There's still a lot of buying power out there, as many traders look at riding momentum. For others, new dynamics may be playing out in equities. Some fearful of government spending and a weaker dollar sees risk in converting to cash. This could result in some sort of unconventional hedge in the stock market, especially in one that increasingly appears disconnected from fundamentals. Really. Yesterday's 2 p.m. $25, yeah. Is that what you're talking about? Yeah. The technical setups for broader markets remain constructive, said a technical market strategists. Momentum indicators have improved, and the majority of the stocks and the S&Ps remain above their 200-day moving average. And the MACDs, oh God, defend upward trends. We reiterate our 1-year S&P price objective is 46.25. This guy predicts year end. Well, they're halfway there, so halfway in the year. So another 10% jump, maybe. I don't know. Less than that, of course. So we'll see what happens. Little number coming out here at 9 o'clock. Very little. Very little. All right, Casey. I'll just say, how about I'll go the other end. I'll say 40, 46, 45, just to see what happens. When you traded in the pit, did you take the summer off? Well, something to be said about that. I don't know if I took it off, but but it was slower. It was like Memorial Day to Labor Day. That's what. That was the summer. And there would always be a day or two here or there where you get a little bit busy, but yeah, no, that's no, no. I work hard every day. Yeah, you remember summer school. Oh, look, we're coming down here to the 31 area. If we are going to partake, our blue band there, is it seriously? Blue band is coming in at 30, a green band coming in at 31. All right, we're coming down here to our 31 area. See what it wants to do. It's testing it anyway. Okay, we're trying to get a little rotation here. A number coming out here in about a minute if you are worried about that. Another ladder ticket is thinned out a little bit, even here with the smaller number. You can tell the less than 100 lots now up and down the ladder ticket. So be a little bit careful. We are trading our level here, but there's a number. So I don't like to have it in position on it. Even if it works, it doesn't matter. Just take a little bit of a profit here. And there it is. Nice little rotation right before the number, right on the number. All right. So that worked out nice for a Friday. All right. Nice little trade there against our 31 entry point there, right on 31 and a half. You took no heat on that whatsoever. Well, that shows you what happens when you're patient a little bit. Good things happen. Got a little lucky there, right on the number. We had our rotation right on it. Well, it went up, so I guess the number was a little bit bullish. Don't like to trade when it's so close, but at least we got in and had a nice rotation up here. At least now we can be happy for the weekend if nothing else happens. I don't know if anything else is going to happen, but at least we're up a little. Those of you who got in at the 32 did okay too. 31 and a half did okay. And so hopefully somewhere along the line there, we got in someplace to help us against our 31 level. Now we're just kind of going back up here to our pivot. We're looking for about 2 points, 3 point stops, 2.3 point profit targets, at least when the market is this slow. So when volatility picks up, I mean, the VIX is down to 15. So when volatility picks up, we obviously have to increase those a little bit, our objectives. But relatively 2 points, at least in these slower markets, we don't get ourselves in too much trouble if we're wrong, and also make a little bit of money if we're right. And we can always make sure we come back tomorrow. $41 level there, Casey. We switched over to SEP, so oh, did I say 41? Okay, I'm sorry. I got them both written down here on my sheet, and I probably looked at the wrong column. I'm going to put an X right through it so I don't say that again. Trading the SEP, 31, down low, support, boom. Okay. All right, we're coming back up here to our pivot, our blue band as well. Kind of, it is what it is. We're kind of just coming back here to our pivot. If you did manage to get long against our first support level there at 31 in the SEP contract, then you did okay. It was our blue band in our hourly, our green band in our 5 minute. Again, we like to layer in reasons to trade. The more reasons you have, the more hopefully confident you get in placing an order and having feel good with it. So we put together a trading methodology that shows you or expresses many kinds of reasons to trade. And then it's up to each individual to determine what trades you are going to execute because of the trades that you can recognize. So recognition of a trade based on the reasons that we have is the first action, course of action, and then the second is to execute, which means putting in your orders, trading it, and we kind of work with you on both those aspects to maximize profits in our education course that we offer. If you're new to this, and if you're not new to this, then we try to hopefully we'll give you more reasons to trade. In addition to yours, nothing wrong with supplementing any kind of trades that one other individual might have so that you can become a better trader. That's what we try to do here on an everyday basis, and also this room that we have, so that sometimes it's easier to have to be in a room there, at least there's some back and forth. Well, right now, because of the lack of trade, there's not so much back and forth. It's just me just going forth. There's no back from you guys. So the only back and forth I get is when people correct me. That's about the only back and forth I get, which is fine. I don't mind that at all. That's what happens when you get slow. You say the wrong things. All right, we're just kind of bouncing here off of our 31 support. Next support level on the downside we have is 25. All right, 25. Anybody have any comments, any questions you would like to add or ask? Put them into the chat box area. I don't mind the questions, especially since it's kind of slow. Questions are good. Understanding is good. Like I said, we're trading futures here in the SEP contract for the E-minis, which is an equity contract. Stocks, equities. And that's what we do here on an everyday basis. The subscription for the $100 is just for the trading room. The education is a separate fee. We do that in our room, in this venue, Zoom, and we use live charts to help us explain the concepts that we teach, so we don't make things up here, so that it fits the perfect description of what the market is trying to do, or what we're looking for in the market. And so we use live charts to help us. So yeah, we do that in the afternoon when things are slow. We focus more in the morning hours to trade. We think we have good ebbs and flows. The volatility is whatever volatility sometimes we have is there. The trade in the afternoon trade becomes a little bit more thinned out. There's a lot less traders involved, especially during the summertime. And the inflection points, the levels, and then tend to be expanded a little bit because of the lack of volatility and lack of participants in the market in the afternoon. It doesn't mean that the levels don't work. It just means that they're not as strong as they are in the morning. The afternoon trade's a little bit, kind of its own little trade as well, has its own little concepts to look at. So it's not terrible. It's just not the trade in the afternoon is not as efficient as it is for us in late afternoon. So that's what we do here. Again, we are just kind of, and then when it gets like this, where we, yesterday kind of, you never know what kind of day we're going to have day to day, when you're trading. Sometimes we expect nothing and we get a lot, and other times we expect a lot and get nothing. So the best way, as far as expectations are concerned, is not to have expectations whatsoever. That way you're not disappointed and you're not exalted. Exalted. You can never be exalted trading. No, I take that back. You can never, whatever. You know what I mean. Something like that. All right, our blue banders and our pivot players got paid off very nicely here. Right. So the scaling in, which is what you're talking about when you say how big a range you give yourself to get in, it all depends on the scaling in. Depends on the individual, how much risk you're willing to take. So some scale in a point above the level, like at 32 and then 30. Some scale in a half a point above the level at 31 and a half and 30 and a half. You have to do whatever is comfortable for you as a trader. So it's, that's why we're not perfect. And that's why the more risk averse like to do probably more 31 and a half and 30 and a half. If you're willing to take more risk, maybe you do 32, 31 and a half and 30 and one and a half, depending on how many contracts you're willing to trade. That's all an individualized question more than anything else. So yeah, that's why when we said we got filled here, and we didn't get down to 31, we got down to 31 and a quarter. But I know a lot of our traders trade 31 and a half area and 31 and 30 and a half. And that's why they probably got filled around that area. That's why I said what I said, that you should have maybe gotten filled around that level as the market comes down here. Now, we don't like to trade the 31 the second time around, especially since we got filled on part of our trade, whether you were in at 32 or 31 and a half. So this might work, but once a level got triggered, it becomes a lot more riskier. So we don't try to dip our toes at second rotation to it, unless there are exceptions to that rule too. I mean, there's no rule, but it's just we try to explain risk. This is what we try to do here, and then you have to, as an individual trader, try to manage the risk according to your risk tolerance, because everybody's different. I try to tell that to people all the time when they ask me about what your track record is. I can't tell you, because if I took a trade, if I scaled in at 32 and and 31 and I got filled at 32, but somebody else did not get filled at 31, I made money, but you didn't. But it doesn't mean that I was wrong and you were wrong. Or so how do you work that out? Like, we didn't get filled at 31 for the last rotation down, but some people did. So, I mean, I'm not trying to be picky. I'm just trying to be honest. That it's very hard for me to say, because I feel that it's an individualized thing here that we're doing. And so you have to understand the concepts and ideas and then take it forward so that it fits your risk tolerance. Hope that explains it. And I like questions. At least, we're talking, chit-chatting. It's good. It's good. While the market is kind of slowly drifting down, a little resistance. If you were a little aggressive against our pivot, it was also our blue band there. If you were a pivot player or a blue bander, some, first rotation back to it might be a good opportunity there if you were a little aggressive. As far as risk reward, I mean, as far as our stops are concerned, is basically what you're asking. Is we're looking for about 2 to 3 point stops with the same amount of price targets. Now, that also varies depending on how much risk you want to take. If you're trading multiple contracts, and we do get in at, let's say, the 31, and you have more than 1 or 2 contracts, you can get out of some at 2, get another one at 3, and maybe get another one at 4 or 5. So we have our stops are 2 to 3, and our profit targets are 2 to 3, and more depending on how we can enter a trade and the price action after that. So 2 to 3, if you're trading 1s and 2s, that's what you're looking at. And if you trade multiple contracts, you're scaling out 2 or 3 and see if we can get a little bit more on any leftover. But that's what we're trying to do here. And that way we can counteract, hopefully sometimes making more money on the longer shorts when we get in at a good price, counteract some of the stops that we're going to have, because, you know, I would tend to agree with that. It's not, it's about right. I mean, look, again, it depends on the levels, how comfortable you are using them, and how comfortable you are in understanding if they work or not. And if you are comfortable enough and you can feel and you can trade 1s or 2s and take your 2 or 3 points, then you're good. You don't necessarily doesn't have to. You don't have to force it to take. It all depends on the trade. I mean, sometimes we bounce down to a level or bounce up to a level, get filled, and then we have a nice rotation, and then you can take your average there a lot better. You know, it gets a lot. We need volatility for that to happen. You know, obviously, and volatility goes both ways, because we can easily go down to a level or up to a level and get run over, and then we have to get out. But if there's a lot of times where we will hit a level and be able to work it so that we can maximize profits and take a good chunk of change out of it. So more than those ratios that you're pointing out. I mean, the rotation there to the, you know, if you did sell our pivot there, you're getting paid off here very nicely, and you really didn't take any heat on that whatsoever. And some of our traders do like to trade our rotation back to our pivot off of a low or a high as a initial bounce off of that pivot. So you could have gotten short. There's what I'm trying to say. Again, the recognition of a trade. It's one. Not everybody likes to take that trade. Not everybody wants to take that trade. It's a matter of if you're comfortable taking that trade or not. And that's the difference here. Some people like to take that trade. Some people look for it. Others don't. They don't like it. So you have to find the trades that you like and you can visualize, and then take advantage of it when they present itself. And slowly down ticking here on the lows. This is 25 is our next support level that we have. Right now, resistance would be around 30. Our pivot there at 35. The settlement price, in case you guys, some of you want to know, are 28.75. 28.75 is the settlement price. All right, market is bouncing around here. Seems like it's getting a little heavy. Next support level we have is down at the 25 area. Could have gotten short anywhere. The place we could have gotten short was a rotation back to our pivot up there earlier. So that would be a price action opportunity. Again, we have levels that we give out, and then we supplement those with price action opportunities that occur. Not everybody has to take those price action opportunities, right? But they are there. It's a matter of recognition of a trade, like I said earlier. That's some levels. Market is slowly dripping down. The support level is down at the 25 area. We're going to get down there now. Just saying. Just kind of slowly, kind of hanging down here on the lows, see what it wants to do. 25 is the next support level. Obviously testing our settlement price here right now. Anybody have any questions? Feel free to ask in the chat box area. We like questions. We are not adverse to questions. If you have any questions about what we're trying to do, how we're trying to do things, please feel free to ask. Again, if you missed our levels, we're going to repeat them in the chat box area. If you look at the chat box or bring up the chat box area, you'll see the levels that are going to be printed in there that we're going to use as a guide. There. Whew. I don't know if you're like taking a break or not. Yeah, there they are for us. And those are the levels that we use as a guide for the day. Like I said, we can add to them, subtract from them. It all depends on the price action. And every day is different. We tweak them as the price action dictates. Those are all concepts and ideas that we throw into our education package, and why we tweak them or why we keep them or why we change them or why we add to them are all dependent on what the market is kind of telling us when we trade around the level. And like I said, sometimes it's easy to, market is a little bit easier to read than other times, but it is what it is. And we are just definitely hanging around. This is from Don. Mark has to work all day. He took off early yesterday. Whoa, those are fighting words. Did he tell you he went to the beach? Probably. Is that where he was going? All right. Kind of giving us a little bit of a bounce here off of our settlement price. Took a little bit of time there to work, but we're getting a little bit of a rotation here. I mentioned it for a reason. Some of our traders like to take that trade. Some, not all. And a nice little, almost 2 points. Okay. So nice little trade there. There we go. If you did were able to get in against our settlement price there, and nice little scalp with using the price action opportunities that we had in the market. And there's different trades. So we have, not everybody takes all the trades that we suggest or are out there. All right. Again, anybody have any questions, feel free to ask in the chat box area. Yes, we had a nice little pop here against our settlement price if you were a little aggressive there. And again, everybody has different risk tolerances, so it doesn't mean that you have to take a trade if it's there. You can see if it works for you. Recognition of the trade, like I said, is one aspect. And if you want to, jump on, you could. If not, it's fine. All right. So, well, we're just kind of hanging down here on this lower end. Resistance would be around the 35 area still. The support is down at the 25 area next. That's where we're at. And in the middle, we have to just be patient. So we've had one level that got triggered and we did well with that. And then we had a couple price action opportunities that got triggered. And again, those price action opportunities are dependent on if you were aggressive or not, and if you recognize the trade or not. Well, let's see if he'll make it today. Mark said he's going back to bed. Can't take it anymore. Anybody have any questions? Feel free to ask in the chat box area. We like questions, especially when it's so slow. All right, we're just kind of hanging here on the lows. All right, market, you just pop the levels up one more time before you take off. Have a good weekend at the beach. I would assume that's where you're going to end up. There they go. Those are levels for us. Me too, Don. Don has his AC on in the middle of winter. What are you talking about? The thing's always on. That market continues to slowly down drift here a little bit. Next support level we have is down at the 25 area. He says it is hot today down in Texas. Well, that was a little obnoxious. If you got into 26, you're doing all right. If you got into 25 and a half there, you're not doing okay. At least you're in. I don't know if you're going to do okay, but at least you're in there. And a nice little rotation there off of the 26 against our 25 area if you did get in at 25. So if you did get in at 26 against our 25, you're doing okay. Again, everybody trades differently. You have to respect the 30 area right now if we do get up there. right, nice rotation there against, if you did get in against the 25 area, 26. You were in there at 5.5. Yeah, obviously did not get filled there. Slowly drifting to our 25 again. If you did not get filled and you're a little concerned about how close you got last time, maybe take the lower end of our entry point there against the 25. So 24.5, 24, if you're a little concerned, or just leave it. Again, because we didn't get filled at 26 when it got down there, and you're concerned about the 25 being a little bit too close, there's a little secondary support right under it. If it's too risky for you and you don't like the trade whatsoever, then just cancel the trade and wait for the next opportunity. And those are all options you have as a trader. I try to explain the risk, and then you have to trade the risk according to your risk tolerance. So those are choices that you have because you came here and missed the entry point by just that much downside. So those are what decisions you have to do here. So it did get right up to the again, the settlement price there, which was probably should have been a closer target than the 30. I think maybe we could get up to 30 there, but we didn't. All right, we're just kind of hanging on the lows. Again, if it's a little bit too tenuous for you because you just missed our entry point by just that much, then wait for the next level on the downside. This is the 19 area. So now the 25 with this price action becomes a little bit more riskier. Just keep that in mind. And the bond market also going down, ticking a little bit, not too much. Just teasing us down here at this 25 area. So obviously, because we've come down here and tested it a couple times, 25 is a lot more riskier now than it was even 5 minutes ago. So if you're more risk averse, I'd probably wait for the 19 area and see what happens there. Are you around there? Can we repeat the levels? Don, can you put them up there if you can do them? If not, then I'll just repeat them out loud. Our pivot this morning, and we're trading the SEP contract. So our pivot this morning is 42.36. Support 31, 25, 19, and 12. Resistance above at 45, 55, 64, and 74. All right, it's definitely held this 26. Again, like I said, the 25 is a lot more riskier now. All right, so be careful there at 25. I would say it's probably not a usable number anymore, level, only because of I guess it should have been 26, not 25. And then rotating, coming up back up here. The resistance would be around the 3 to 34 area. Anything above 36 or 35, depending on how tight your stop is, would probably don't want to be short anymore. Looking at the 19, the next support level on the downside. I mean, getting a little bit choppy here. So be careful there against the, like I said, probably a lot more riskier trade right now against that 25 than it was, even 5 minutes ago. All right. All right. So a little bit of a break. Come back in a bit.
Hey, a couple quick programming notes. For those that are coming in as guests, take the time to roll over into a subscriber to the service. Make sure you get the friends and family rate. I'll send out to you the opportunity to do that in chat, in the chat area. If you haven't done it, raise your hand and I'll send it out to you personally. Right now, I'm sending it out to you in the chat area. Hey, Vincente, let me know if you have any questions. Ron R. Mark S. Hey, Mark, I tried to reach out to you a couple times yesterday. So give me a quick hi sign. KP. Jim M. Hey, Carlo, I didn't see you sneak in there. If anybody has any questions about Sal's course and his mentoring work, also raise your hand and we can set up a time to chat about it. Make sure you first sign up for Sal's Friends and Family. It's usually on for $379. Right now you're saving $279 a month and it's on for $100. And thanks for being here. If you like what we're doing, refer your friends. Thank you.